Hello and welcome to today's webinar on green finance held between the TheCityUK and the Italian Embassy here in London. My name is Miles Celic and I'm the Chief Executive of the TheCityUK, and I'm delighted that so many people have joined this webinar today. We know that there are people from across a very broad spectrum of financial and related professional services firms, from the diplomatic community based here in the UK, reflecting what is a cross-sectoral and international interest in green finance. And I think that is particularly embodied this year in the UK and Italy's respective G7 and G20 presidencies, and in the joint COP26 presidency, which has the chance to act as a catalyst for progress on green finance and on climate change more broadly. As the world looks ahead to its recovery from COVID-19, building back better in a green and sustainable way has become a focus of governments across the whole world. And the financial and related professional services sector has a key role to play in supporting this goal. In fact, if you look at this across the industry, there are already many examples of firms that are working together, playing a crucial role in enabling the transition to a green economy. And I look forward to hearing more on this from our excellent panelists a little bit later in this webinar. We're very grateful to all of our speakers today, and I'd like to extend my particular thanks to the Italian Embassy here in the UK, and particularly Massimo Carlopos for partnering with us in today's event. I'd like now to turn to our first speaker, Raffaele Trombetta, the Italian ambassador here in the UK, who's been the ambassador since 2018, and in fact, from previous experience, knows the G7 and G20 process extremely well, and has been a valued partner for the work that the TheCityUK and the City of London Corporation do under the auspices of our Anglo-Italian Financial Services Dialogue. Ambassador, thank you very much for joining us, and over to you.
Thank you very much. And well, first of all, let me thank you, the TheCityUK, and you, Miles, for organizing this event, also for the very nice presentation that you gave me. I also want to thank Ivan Faiella from the Banca of Italy, who will be delivering the keynote address, and let me also thank the other participants in the round table. As you mentioned, this year is actually a cornerstone in the fight against climate change and for a green economy, and UK and Italy have a key role to play in the UK's G7 agenda. Tackling climate change featured as one of the main objectives, and it was already dealt with the foreign ministers meeting in London early this week. Among other things, let me remind all of you that they agreed on a commitment to mobilize $100 billion annually through to 2025. The Italian G20 agenda is based on three P's: people, planet, and prosperity, where planet stands for higher national commitment under the Paris Agreement, the implementation of the SDGs, a better urban environment and biodiversity, and also, and I would say above all, new models for producing and consuming, the circular economy. There is, as it is evident, a full complementarity between the two agendas, and both will prepare, the COP26, which, as you mentioned, will be co-chaired by Italy and the UK. Well, the success of the Glasgow conference is not a given. It will be a big challenge, but there are some promising steps. The commitment of the Biden administration, the important role played by John Kerry, as shown at the recent Earth Summit, Earth Day Summit. The EU plan to reduce emission by 55% before 2030 on the road to net zero in 2050. On the diplomatic side, climate diplomacy is going on with countries such as China, India, Brazil, Africa. Africa is important. Africa will deserve our special attention and efforts as one of the most vulnerable areas of the world. And for these reasons, Italy will organize in October an outreach event on environmental and climate challenges in Africa to help emphasize critical issues and possible ways of action in tackling climate change on the continent. Well, at the same time, it's also widely acknowledged now that green and growth must and can go hand in hand. You know, the risk, the existential risk caused by climate change can be transformed into a great opportunity, and finance can be a real game changer. Financial industries is rising up to the challenge with an increasing focus among asset managers, banks, pension funds, insurance, as well as corporates. Once again, the UK and the European Union are in the forefront also from this point of view. At the European level, the green transition is the backbone of the post-COVID recovery plans, the next generation EU. As far as my country is concerned, Italy, in the recently approved Italian National Plan for Recovery and Resilience, in this plan, 37% of financial resources will be used for the green transition. Well, that also means stress that the total expected investment for the plan as a whole amount to 222.1 billion euros, of which 191.5 billion euros coming from the Recovery and Resilience Facility of the Next Generation Fund, and a further 30.6 billion euros of the coming from the Complementary Fund. Well, finally, and more recently, the European Commission published a very significant package of sustainable finance measures, the EU Sustainable Finance, the April package, with a focus on taxonomies, disclosure requirements, and reporting standards. Well, I'm sure that these and many other topics will be examined in details in today's webinar, and I'm personally looking forward to it. Well, thank you very much.
Ambassador, thank you very much indeed for those remarks. I think that gets us off to a terrific start, and I think your point here that finance is part of the solution and properly enabled can contribute to a green future is very much, I think, the watchword for the rest of this discussion. So thank you very much indeed for your comments today and for your support for this work, both today and no doubt in the future. I turn now to our keynote speaker. I'm delighted that we're able to be joined by Ivan Faiella, who is the coordinator of the G20 Sustainable Finance Task Force at the Bank of Italy. Ivan will be running us through a presentation setting out many of the challenges and solutions ahead. So Ivan, thank you so much for joining us. I can't think of anybody better to run us through where the challenges are, and over to you.
Thanks a lot, Miles. Thanks for the opportunity of being here presenting the work of the G20 in this important topic that is sustainable finance. And you see, and underline sustainable finance, so not just green finance, because that's it's even more, it's even broader. This discussion on sustainable finance was never officially in the agenda of the G20, and you and also the ambassador underlined that there is this kind of magic alignment of having the G7 in the UK, the G20 presidency in Italy, at the same time having this joint co-hosting of the COP26. I like to underline the role of the G20, not just an overlapping, it's not a second COP26. We can see the COP26 as, setting where we want to go. National determined contribution, some countries, many countries, luckily, are stating they are going to be climate neutral by mid-century. The point is that let's imagine that COP26 is where we want to go, while the G20 activity, at least in my perspective, is the path, along the kind of way we are going to achieve the targets. Because to achieve the targets, we need finance, we need policies. And, most of these things are in the end of finance ministries. So the financial track of the G20 decided to step up these activities. There was not, it's the first time that we have officially sustainable finance in the G20 agenda as a permanent thing. Here in this slide, I'm showing you what was in the communique. It seemed that, in the G20, let's be honest, you're not going to achieve much of substance. You have high-level messages, but for the first time, you have a reference of climate change. You have a clear reference of how essential it is to have financial markets on board. So public finance is not enough because the challenge is too big. The amount of resources we need for the transition are too much money to be achieved by public finance alone. But at the same time, that to orient financial markets toward these investments, we need to provide the right signal to them. They need the right amount of information, the granular information to spot what's green or sustainable and what's not. And these things is not going to be solved by the G20 this year. So the point, our real achievement was to try to have a discussion on board, to keep the discussion ongoing for the next years, because we have to work on that it's a long-term achievement. These things of the transition is not something I'm going to achieve in a few years. And I think the big point of the Italian presidency was reviving this, what was called before in 2016, the Green Finance Study Group, then became the Sustainable Finance Study Group. And under the G20 presidency, it became the Sustainable Finance Working Group. That's a big difference because the working group is going to be there to stay in the G20 process. The working group can provide recommendations while the study group could not. And the point of having the Sustainable Finance Working Group alive and kicking again was not only, having the group on, but we asked, and luckily we succeed in that, having US and China co-chairing this group. US and China emissions are more than 40% actually of global emissions. So we have two big players. We have, if you want, two big players that are in a different side of big emitters, with still a growing demand. So having, a real challenge in transitioning. And a big emitters, but that where the emission plateau and decrease because of the shale gas revolution. So the situation is that you have both of them on board because the challenges are going to be different between emerging countries and industrialized countries. And at the same time, that you need global action. So you need some way to find a convergence. Think about carbon pricing, carbon border adjustment, and how these things is related, for example, to the concept of common but differentiated responsibilities. No, I mean, it's obvious that it makes a lot of sense to put the carbon border adjustment as a level playing field, but emerging countries can say, well, but this is going to conflict somehow with common but differentiated responsibility. So we have to be aware of that because we have to find a way to overcome these obstacles. As a practical point of view, this is the timeline of the activities of the group. And if you concentrate on 2021, you see that this year we are going to expect 3 deliverables. And some of this stuff was mentioned before by Ambassador Trombetta, are part of the agenda of the EU. Let's say that are difficult within the EU, so are going to be even more difficult at the G20 level, again, because of the main difference in capacity building and in expertise and in data availability, for example. But the first point is improving sustainability reporting. We should have more and better information, and the only way to have better information is to have, the emitters and the people that is affecting the environment providing us with that information. So there is this initiative. We know that there are initiatives at the EU level, but this is the initiative at the international level with IOSCO, with IFRS, with the Financial Stability Board, trying to scale up this activity and find common way to have comparable reporting. I know that under the G7 there is this discussion of a compulsory disclosure, This is going to be more difficult for the G20, but at least having some common principles governing the disclosure. Starting focusing on climate. We know that other things are important. For example, this year we are going to have also the COP on biodiversity in Beijing. We know that biodiversity is connected with climate because biodiversity is going to be damaged by climate change. At the same time, many nature-based solutions that improve biodiversity can help tackling climate change. But we have to start from something. Second point is what we call taxonomies in Europe, align investments to sustainability goals. I mean, there is a classification system. This classification system must change, must be focused on activities, on sectors, on assets, must be a green taxonomy, must be a brown taxonomy. So that's tricky, no? But we have again to find some common principles. China has a long-lasting experience of that. EU now is 2 years that is working on that. Again, it's not easy, but I think we achieved a lot and try to find common way to define this kind of classification. Lastly, the role of multilateral development banks that they should help developing countries to improve their economic growth, but at the same time put them on a path to not to be locked in with fossil fuels, for example. So align and increase their capacity, the way they increase capacity building in emerging countries to tackle this point of putting them in a path that is coherent with their national determined contribution and their climate targets. So these are the 10 main deliverables. But as I said before, the really important point is that the group is there. So apart from the deliverable, we are going to have a roadmap. So a long roadmap, a long-lasting roadmap, clear roadmap that is going to be focused starting again on climate. And and the ambition is, I think Miles said before, there are many initiatives. Try to have some kind of common denominator to coordinate somehow the many initiatives that are out there. The group is, for example, every year is going to produce a synthesis report, and I think this coin is going to be useful because it's going to, in a sense, a kind of wrapping up of all the stuff that is out there. Here I'm going to show you just the timeline of the Sustainable Finance Working Group initiative. In a few days from now, we are going to have a private sector roundtable, because the thing we would like to know is the private sector needs something different along these three deliverables and along the roadmap. In fact, we're going to have, as you can see, also a roadmap consultation, just to be sure that we are on the same page. I mean, we don't want to work for ourselves. We want to work to provide the better results in terms, for example, of tools to deal with the transition, portfolio alignment tool, or this kind of stuff that is very used today. But there are so many different approaches, so many different things that it would be very useful to converge. Then we have some kind of high-level events. I'm underlining here two high-level events. The first one is the G20 Tax Symposium is going to be held on the 9th of July. The Tax Symposium is going to focus on environmental taxation, in particular on carbon pricing. And then the G20 Venice Climate Conference is going to be structured in a way that is really similar to the work of Sustainable Finance Working Group. So global policies, what are the policies to achieve the transition? Carbon pricing, low carbon technology support, keeping in mind also the need to improve universal energy access, for example. So taking into account all these kind of problems, and the role of information, disclosure, multilateral development banks, and the role of private market. So in a sense, these kind of events are trying to, again, put all these things together. So it's important to have disclosure. It's important of having data gaps. I'm working for a central bank. It's, would be weird a couple of years ago having people of central bank talking about this stuff. But, we also know that all starts from government policies. So we have also to be blatant and honest and recognize that, carbon pricing, carbon border adjustment, fossil fuel subsidies removal should be on the agenda, because that kind of policies and long-term policies are the ones that can provide that kind of, let's say, reduce uncertainty. Financial markets, they do not like uncertainty. So if we want to have what is called an order transition, we really need to have a plan on that. So we need to be clear that we need, for example, having a price of carbon, you can have different way to go for that. We know that maybe US is not going to like to have a carbon taxation unless there is a carbon border adjustment. We can discuss that. We can have a regulation, for example, to cap emission. But at the end of the day, financial markets alone are not able to do the transition. I mean, they are really important. They can provide resources. They can make the difference and then scale up the transition. But we need also to discuss on that. So the idea is having focus on all the financial markets need, but at the same time trying to stimulate the financial ministers and the governments to take action. If you want to move from the ambition and from the targets in very humbling way to start doing few steps toward the transition. That's much of for my presentation, and I hope I'm going to see you at the May event at the private sector roundtable on the 17th and 18th.
Ivan, that was a fantastic overview of the timeline, the progress that's been made, and the progress that needs to be made. Just one question for you, but in two parts. So I'm going to cheat slightly and sort of have two aspects to this. So firstly, we've seen a significant shift with the Biden administration in terms of the US approach on sustainable finance and on climate change. Recently, there seems to be an appetite for American leadership in this area that perhaps wasn't there in quite the same way previously. So, what do you see that, and we saw that recently in the Earth Day Summit. So what do you think that's going to mean in terms of tangible progress on sustainable finance globally and for international cooperation on the issue? And then my second sort of related question is that we are seeing a variety now of national and regional sustainable finance initiatives globally, so either by individual countries or by groupings of countries, and is there a risk here that because these are not aligned with one another, what does that mean in terms of the long-term picture towards either convergence or fragmentation? And are you seeing any sort of common ground emerging between G20 countries on this?
Well, both very difficult question to answer, but I would say for US, that's true that there was a dramatic change with the US administration. We know that. At the same time, to be honest, the US financial markets was pretty clear about the direction was taking in terms of investing in ESG products. Let's use this very shortcut. So it's true that in a sense was what I think market operators were expecting, to align what the direction of the market and the regulation that is needed, as I said before, to be sure that you are going in the right direction. We try as hard as possible to have US on board. It was not easy because there was the transition during the beginning of the work of the G20, but we waited to set up all the sustainable finance track to be sure to have the US on board. So I think that's going to be a big difference. And it seems also, I said before that even if the Biden administration, they don't want to talk about carbon taxation, but if you look at some statement of John Kerry, for example, they are not completely saying we are not going to talk about that. They want just to be sure that there is some kind of level playing field. It's going to be very expensive for them from the political point of view, but if we are acting all together, that's a completely different story. And I'm rather optimistic on that. Then there is the discussion of, I think a kind of sensitivity, while the US, they don't like red tape, they don't like regulation. So you need some kind of balance between, for example, the compulsory disclosure, the use of taxonomies, and be on the safe side that you have the kind of freedom to be innovative, to try to invent new products, and that are also, I think it's really important for financing the transition. But that I think the direction is right, and I think we're going to be surprised during the year by the new initiatives of the US. And I can tell you, it's a pleasure to see US and China work together. That's really a pleasure. I mean, it seems really it never happens during the meeting that they are losing time in discussing what they are not agree upon, but they always find a way where they converge. Second point, all these initiatives are exactly to avoid that fragmentation you were mentioning. That does not mean that there is a one-size-fits-all. I mean, obviously, emerging countries are going to be have a completely different approach compared to developed countries in terms, for example, or taxonomies, or even the role of the financial regulators. We know, for example, that the central bank in China has a lot of initiatives in terms of environment, but it's going to be a bit weird, for example, in Italy and Europe, because we have a Minister of Environment, we have a Minister of Energy. So there is, I think sometimes some kind of financial regulators are in a source stepping in because they are stronger in terms of the ability to act. So that said, that situation is different. Also, the challenges are different, as I said before. I think that at least we should find a common denominator. These things is also to help a lot emerging countries, because they are going to provide a lot of opportunities. Most of the opportunities for this transition is going to be there. So they really need the finance to go in that right direction, but they don't know how to attract finance. So I think we can help somehow with these initiatives to tell them, use the right disclosure, use the right data, design the right instrument. Think about just, for example, the initiative on voluntary carbon markets. That can be, they can provide some kind of carbon sinks in exchange of financial flows, even debt restructuring, with the debt subordinated swap. So I think I see a lot of opportunities. We need a kind of coordination, govern at the global level. My hopes is that the G20 could do that kind of work.
Ivan, that's been a terrific set of thought-provoking and very instructive answers following a superb presentation. Thank you very much indeed for your time at what I know is a very busy period, as I'm sure the rest of the year will be, but thank you very much indeed. It's now my pleasure to turn to our panel, and our panel is being led by Michelle Davies, partner and co-head of ESG and international head of clean energy and sustainability at Eversheds Sutherland. It's a superb panel. We're very fortunate to be joined by all of them, and I now turn to Michelle to introduce them. Michelle, over to you.
Great, thank you, Miles, and thank you, Citi UK, for inviting me to chair what I think as well is going to be a great panel discussion. For the audience, please do feel free to ask whatever questions you think are appropriate, and we'll try and answer them as we go along. As Miles said, I'm the co-head of ESG, but also of the whole sort of climate change and clean energy and sustainability team at Eversheds Sutherland, and I've been engrossed in the sector for 20 years, but I can honestly say, hand on heart, that I actually haven't seen as much acceleration and traction and focus from the financial community in all things linked to decarbonisation and the energy transition as I have in the last 12 to 18 months. It is pretty incredible. And I would like to just start off with that very quick question to each of the panelists so that they can very briefly introduce themselves and just give a sense of the level of change that they're experiencing in terms of the need to finance the green economy, which is what we're going to be focusing on in this session, and the level of acceleration and traction that we're experiencing. Just very quickly, if you can, please, just 2 minutes. Stefano, could I come to you to introduce yourself and just give a very brief view on that point, please?
Sure, Michelle. I'm the vice chairman of Green Arrow Capital, which is an asset management firm based in Milan and London. We were born as, with ESG in our DNA, just by the name. And we've been investing in renewable resources and infrastructure since the beginning. We started the business in 2014 with the first fund, and then we went on and on and on. And we're now launching a large infrastructure fund. What is interesting of what she said is that the good part of renewable resources are now becoming part of the infrastructure. And as you know, all the governments are now going to be going for expansion and improvement in infrastructure. So this is actually becoming a core part of international portfolios. And regarding myself, I mean, I did as a CV on paper. I've been educated in the States, New York University, where I served on the board of the university for 15 years. I've been the head of Morgan Stanley Investment Management Europe, running Europe and Middle East. And then I've been the CEO of Renaissance Technology, a large quant hedge fund, American-based, out of London. And that's all for me. 2 minutes.
Great, thank you. Very good, Stefano. And Elree, you are Managing Director and Head of Environmental, Social and Governance at Citi. Could you just give a bit more detail on your background, but also the level of change that you've experienced in the last 12 to 18 months, please?
Oh, thanks, Michelle, for asking me to join the conversation with Stefano and Mark. So I have been involved in either conservation or pretty much energy and renewables for 30 years, whether it's project finance or renewables venture capital, or I actually took 10 years off and worked in Africa and conservation in the middle of my career. But what I think is really fascinating, as you said, with 20 years of experience in this field, or 30 or 40, I've never seen a time that it is actually underpinning the market. We say it's a transformational evolution in our market, that assets will reprice as we start integrating things like climate risk, and capital is being deployed differently. Bloomberg actually guesstimates or estimates that about 1/3 of assets under management by 2025 will be ESG aligned. And a lot of that has to do with climate and those kinds of disclosure, but it's really underpinned by consumer and investor behavior, along with the regulation. So it's a really exciting time to be a banker, an investor, a corporate that needs to transition, and an entrepreneur.
I couldn't agree more, Elree, and I'm looking forward to hearing some more of your views as we go through the session. And then last but by no means least, Mark Garvin, who is Vice Chairman of Corporate and the Investment Bank at JP Morgan. Could you say a bit more about your background, Mark, please? And also just, you know, from your perspective, what's been happening over the last 12 to 18 months, and to what extent is JP Morgan accessing this?
Thank you, Michelle. You're absolutely right. You mentioned the acceleration, traction, and focus, and those are very much the watchwords at JP Morgan. In last October, we announced that we are aligning our financing with the Paris Agreement, and we will set intermediate emission targets for all of our financing portfolios, and these will focus on oil and gas, electric power, and auto manufacturing. We've also created a Center for Carbon Transmission, which will provide clients with a centralized access to sustainability-focused financing, research, and advisory solutions. And then last month, we announced that we plan to invest $2.5 trillion over the next decade in long-term solutions that contribute to sustainable development. Within this initiative, $1 trillion has been allocated to green projects, including renewables, clean technology, and similar commitments. And our $2.5 trillion envelope will also address socioeconomic issues in developing countries, and this very important topic of economic inclusion in advanced economies, to help address the disruption that's caused in the short term by the transition to net zero. So we will be sharing more details on all these initiatives in the course of the year, and these will also be informed by the recommendations of the TCFD as well. So there's a lot going on. It's very central to our agenda.
Thank you, Mark. And I think the point you make about taking a longer term view of the transition and investment needing to go in now to enable that to happen is important, and we'll pick up on that on some of the questions that I have. I'd like to begin really by focusing on what we mean by the green economy, and actually what needs to be financed in order for climate risk to be managed and for decarbonisation to happen, and indeed for this transition that Elree referred to happens. In terms of what I'm seeing in what I do, and as I say, I live and breathe the sector, and it's all that I work in. what I'm seeing is that the green economy now presents far more opportunities for investors than it ever did. You know, if I go back even 5 or 6 years ago, it was predominantly about renewable power. But now we have many energy transition type infrastructure opportunities. We have the supporting infrastructure that's necessary to enable those transitional projects to happen. And then we have all the various opportunities within organizations that are sitting below that, providing, if you like, goods and services into those. And then the big change that I've seen, if I look at the work that I've predominantly done, it's been for those that I would refer to as the solution providers and the solution funders. So, you know, in the old days, the renewable energy developers, owner operators, and the banks and the funds that were investing in and financing. Much of our work now is working with corporates who need to decarbonize and who either need to fund that either on or off balance sheet. But the other thing that we're noticing is that not all areas are sufficiently mature for what investors require at the moment. I mean, Stefano, you mentioned that renewables is now really an infrastructure class asset, but the other elements of the energy transition may not necessarily be there. And I'd like to go to you, Stefano, first, if that's okay, in terms of what are you seeing being financed at the moment, and what is on your radar for future opportunities? And could you say something about the immaturity of certain assets which still need to be financed and how that's going to happen, in your opinion?
Yes, I'll try to address the answers to all your questions. I'd like to open up saying that, you know, we are an asset management firm, so we do something even more than financing. We do invest on behalf of our institutional clients. So we're in the business to turn stones into business sometimes, and also I'd like to open up by saying that in the whole ESG story and commitments, from the personal point of view, doing well for the world is not necessarily the same as doing well for our investors. In other words, we have to use properly the resources we have and focus on certain asset classes rather than others. When you were speaking before, and we were talking about the fact that renewable resources are becoming part of the infrastructure of the world. Yes, it's true. There are some wonderful things that can happen. For example, I was thinking that if all of us in the same neighborhood buy a Tesla or whatever, an electric car, and we all decide to charge them all at the same time, the grid does not work well enough. And the whole thing is power is going to go off. So we're going to have blackouts because electric cars do absorb a lot of energy. So in those infrastructures, for example, there's need to be need of improvements at all levels. When we started investing in renewable resources, we were almost pioneers in 2012, 13, 14. Yes, we were only talking about solar energy and some wind. Now, and actually, let me tell you, we were looking at yields. I'm going to try not to be too technical. We were looking at yields for clients between 8 and 10% per year on a non-leveraged basis, which was quite ambitious. We managed to get it done because the market was there at the time. If we were to do it today, we would not be making more than 3%. So things do change and you have to adapt to that. Today, what we really look at, and this is to answer your question, yes, we look at building a portfolio of solar, wind, and hydro. But at the same time, we are focusing very much on some opportunities. As you know, we cannot look after every single opportunity because it's impossible. But we're looking at EV charging infrastructure, electrical vehicles. We are looking at batteries, and we are looking at digital, which has not much to do with renewable, but it's part of the infrastructure. And we have decided to focus on these three things, and the bulk of the portfolio on solar, wind, and hydro, and then batteries, EV charging, and digital, like 30% of the portfolio, where we can have much higher returns. If you want, I can make an example for example, there's a lot of talk about electrical vehicle charging stations and ideas. And from an investor's point of view, I have to create value. And this is, I mean, the electricity that we produce from our renewable resources, and I'm giving you some numbers, gets, so if I want to sell it, I sell it to a local utility at 50 euros per kilowatt, okay? If you if you set up a charging station, an EV charging station, and you need the electricity to then distribute it to your clients, and you buy it from the local utility, you're going to end up paying 300 or 400 euros per kilowatt. And the final client is going to pay something more. But in order to create value, what we do is that we have a large amount of renewable resource electricity production, which we use for the electrical mobility, meaning that we buy from ourselves, from our own plants, the electricity at 50, and we can manage to sell it at 400, 500. And that's where you create real value. There's a number of entrepreneurs, Michelle, that have started the electrical vehicle charging business without producing electricity. And therefore, they were forced to buy from the utilities. But then your margins go like this. So there's a lot of strategic, intelligent, or less intelligent things that you have to do to turn it into profitable business. And we are, in any case, talking about something good for the world. But to make it a business is slightly different.
Yes, no, thank you, Stefano. And, you know, you've mentioned one of the technologies and one of the challenges, you know, EV charging infrastructure, the impact that that puts on the grid. And what we see with a number of the organizations that we work with at the moment, including in particular the funds who are investing, is they're trying to assess which technologies to invest in now. You know, is it hydrogen, is it electric heat, is it the grid infrastructure? And so much really depends on how the transition ultimately plays out in that particular market. And Elree, governments, you know, in particular in the mature markets, you know, are reluctant to favor one technology over the other. And you know, in my home market in the UK, the government is very much focused on, you know, setting policy in principle, but letting the market decide which is the most appropriate technology. And one of the things that really concerns me is, given the pace at which the transition needs to happen, do governments actually need to be more directive in their policy to provide the support that's needed for these less mature technologies? And, you know, where there are barriers, as Stefano has mentioned, in particular around grid infrastructure, to enable that investment to happen, because with the investors having comfort that the end technology which that grid will be providing will prevail. Do you think governments need to be more prescriptive with policy, or do you think, you know, what's happening generally, and I know it's a big question, Elree, but with policy, it's going in the right direction and is where it needs to be?
So I'm going to actually take that in two separate parts. One is about the technology and one is about the policy. And in terms of technology itself, I actually think that the governments are giving clear direction in some areas, and they're also the lack of clear direction in other areas is actually giving a strong signal. So we talk a lot, I sit in markets, and we talk a lot about signals. And I think it's really important to step back and say, well, what is government's responsibility? So to me, I really simplify it and say, you know, food security, border security, energy security. And when you think about climate change, I'm going to start saying climate change is reflected and climate security is reflected across that value chain. We also know that historically they've been very involved in supporting technologies and supporting that energy, access to energy, and that commercialization of energy. So we've certainly seen it in fossil fuels, the fossil fuel subsidies, the relaxation of certain environmental standards, and of course, decommissioning. We certainly see it in nuclear because we have guaranteed feed-in tariffs, and they also provide insurance where they would never, as a standalone, you would never get insurance for a nuclear facility. They also have been instrumental in the renewables market, particularly onshore wind and solar, whether it's the EU, I think something like 64% of capacity, installed capacity by like 3 years ago had an EIB link in it somewhere. We also see something very similar in the States, where we've had the Recovery and Reinvestment Act in 2009 that really underpinned investment in the States in terms of renewables. I think now what's happening is their absence of focus on distributed generation is a big signal. They also are clearly not that focused on existing renewable technology, probably because it's already pari passu with fossil fuels. I think we do see a lot of focus on hydrogen. I'm slightly concerned that we are very focused on hydrogen at the expense of the other technologies. Hydrogen has a long way to go. I think that they're focused on the hard to abate sectors, the high heat sectors, where you can have, and trucking and aircrafts, where you have hubs where you can have refueling. And of course, the importance of storage. But I think they're investing a lot of focus in that hydrogen opportunity. And it's a long way until it can be commercialized, until we can actually deploy capital in it. And I think the absence of focus on some of the supporting, but not necessarily as cyclical and seasonal technologies like anaerobic digestion, tidal, and so on is really critical. And it's hard to get access. It's hard for our clients, particularly the ones that trade in public markets, to get access to those. So going back to what we need, I think there's a couple of simple things. Massimo mentioned we need a clear carbon price. The EU has done a great job. It looks like they're not going to step in. I mean, we don't see signs of them really stepping in if we hit that magic 74 euro, 76 euro mark. What the UK does remains to be seen in terms of its carbon pricing. In the States, I think it's actually really interesting that they haven't pursued a cap and trade model. There's talk about a carbon tax, but that's a really important signal for the market. We need to be able to bring we need to start integrating those externalities. Standardized disclosure is going to be really critical. Again, we see the EU taking the lead in terms of classifying the activities, but we need transition. We need light greens, we need light browns, not just a hardcore green. And I think it's particularly difficult. They've established some bright lines, but of course it means different things to different people. And importantly, they really need to de-risk projects. Again, Massimo mentioned the idea of multilateral agencies, but I'm going to take it back to even de-risking tranches in the developed markets is really critical. These are long-term projects, and we still don't have a good business model for renewables. It's one thing to be an investor in a special purpose vehicle, but in terms of an overall business model, it's still challenged. And finally, capital treatment. Just because something's green doesn't mean that it's not risky. They're frequently illiquid. We don't know how to scale them yet. They're idiosyncratic, hard to securitize. So there's a lot of work that needs to be done around that as well.
Thank you, Elree. There's so much I'd like to ask you about some of the comments you've made, but unfortunately we don't have time. But I'm going to pick up on one point you made, which is around global alignment on climate reporting. And I'd like to ask Mark, because, you know, Mark, you gave some fantastic targets that your organization is now striving towards and the commitments that you're making. Can I ask you, you know, in terms of your own organization, to what extent is that being driven by the disclosure and reporting regulations such as TCFD and CSRD in Europe? And to what extent do you think that that is driving green investment, or at least an appetite for green investment in the green economy more generally? That's the first question. And then secondly, Mark, just to get your sense on how critical it is or not to have global alignment on these reporting and disclosure standards?
Michelle, I think yes. The topic of disclosures is it's more prosaic than the topics we were discussing earlier. But there's the quality of disclosures and the disclosure framework that we eventually put in place globally is fundamental, because it's the MIS. It allows us to know where we're going and how we're, the direction of travel. So I look at it as basically a question of integrity. Are the metrics measurable? Can we measure where we're going? And it's also very important as a means of combating greenwashing. So there's good news and there's bad news. The good news, but I'll start with the bad news. The bad news is there's been a plethora of initiatives globally by jurisdiction and all that. Now, I think the good news is that, and that plethora, by the way, that multitude of initiatives is, creates fragmentation, potentially impediments to free flow of capital. And I think it doesn't learn from the experience of the financial crisis and the reform process that ensued from that. The lesson learned from that is that cohesion, alignment are very, very important in all of that. Coordination. So, and that is beginning to happen. So that's the good news. So coordination, consistency, and cohesion, I think, are very, very important. That is happening. There is a growing appreciation that this is very important. And as you said, there are initiatives like CSRD, the UK is rolling out a regime. So this is moving, and there is an appreciation for the importance of keeping a form of alignment. I think the other was also very important is to try and keep it, frankly, and I know this is difficult, as simple as possible, because it can get extremely complex. So are the regulations too complex and therefore confusing? And are they relevant? Are these disclosures relevant? Are they fit for purpose? And these are some of the tests we should apply to them. And there is, as I said, good news on all this as well. So to my mind, I think that there also needs to be an equivalence framework. It should also be designed to avoid duplicative frameworks, duplication of frameworks, ensure comparability between firms, and to prevent impediments to cross-border investment. So all of this, it is coming together very well, and I think that we're all beginning to work on these, and they're all falling into place, and we don't have much time to do that. As I said, the disclosures, the EU's coming out with a regime, of course, which will measure disclosures on an EU subsidiary basis, but there is an acknowledgement that perhaps it's better to measure these at a parent basis. Now that's important for global firms like ours, because that actually is more holistic. So I think these things, we have time to do, there is some time to iron out all these potential inconsistencies, but it's very, very important that the regime be relevant and that it also be not overly complex and fit for purpose. Final point to make is that while it's absolutely imperative to have a disclosure regime that's effective and as consistent as possible, it is necessary, but it is insufficient. What is going to drive the green finance agenda is the ability of the industry to identify investable opportunities. And the other speakers made a number of excellent points on this front. So yes, we can do all these disclosures, but in the end, we need to have market forces play an enormous role in this. We've all mentioned carbon tax. So yes, by all means, disclosures are necessary, but they're not sufficient to do the job.
Thank you, Mark. And of course, that I'm stating the obvious here, but data is critical, and the accuracy of that data and the ability for it to be verified to a standard which I don't think exists at the moment, but which will. And in some of the conversations I've been having with some fund managers is a concern around an issue that they believe is going to emerge in the next couple of years around greenwashing. because there has been an abundance of capital that's been available, that's really been trying to find a green home, if you like. And there are real concerns about whether what has been invested in properly is green, or where there may be some other underlying sustainability concerns, and going into the wider ESG agenda. Mark, is that something that's on your radar, Elree, Stefano?
Just a quick word from me. The answer is absolutely yes. We, of course, are financial intermediaries, so we have to ensure that the information we rely on has integrity, because it will also provide us with the MIS for which we're accountable. So all of this has to be an enforceable regime with sanctions, of course. So that's one way of ensuring that this has, as I said before, integrity, and it's effective, because the chance for getting this wrong is not insignificant. Absolutely right.
That's key. Thank you, Mark. And so, there's an awful lot. There's an awful lot of change that we're experiencing. There's a lot of there's an increased acceleration, driven in part by the new regulation that is applicable now, not only to financial institutions, but to companies in the UK. It's being extended to non-listed companies as well. So this is there's a huge amount happening. There's a huge amount that needs to be financed. And as Mark has said, it's critical that the system has integrity and is capable of withstanding the scrutiny that is without doubt due to come to enable this financing to happen in the way that it needs to. I'm going to finish there, but I am going to thank the panel for their expert views and contributions and for their time today. And I will now hand back to Miles, and thank you again, Miles, for inviting me to participate.
Michelle, thank you very much to you, to Elree, to Mark, and to Stefano. I think that's been an absolutely fantastic, fascinating panel, and I'm sure everyone in the audience will agree with that. As we draw to a close for this event, I think this is quite clearly, as the discussion has shown today, a pivotal time for green finance and for the role that we can play. As we've heard, there is a lot that needs to be done to support the industry in delivering the promise of green finance. But despite this, we've already seen progress that the industry has made in actively facilitating the real world transition to a green economy. So as we draw this event to a close, clearly a lot done, a lot still to do. I would like to thank all of our panelists and speakers. I'd like to thank again the Ambassador and Ivan for their time today. I'd like to thank the teams at TheCityUK and the Italian Embassy for the work that went into putting on this event. And all that remains for me to say is to wish you all a lovely weekend as and when you get there. Thanks very much indeed.